All right. Good morning. A little bit of a late start. Sorry about that. We're going anywhere. Anyway, that's fine. Okay. I'm going to start with SPX today. We know the market's gapping up here a little bit. And as you know, this move is something that hasn't happened too often. I think I read it's only happened three times in the history of the stock market that this move over 11 days, the extent of the move has only happened at those times. And one of them that caught my eye was 1999. I think it was. I think it said 1999, but it went on. It went on to say of those three times, none of those resulted in a top. And I thought to myself, well, really? And to an extent, I suppose it's true in that it didn't happen immediately. I didn't go look at the other years, but I think they said it was December of 1999. And yeah, the market did not top out, but it did happen in March of the next year. And that was followed by the NASDAQ going down 95%. And that doesn't mean it's something like that is going to happen today or in the next 3 months. We don't know what's going to happen in 3 months. But the underpinnings of what caused that correction in 2000, and so not the same as what's today. And we'll continue to monitor what happens going forward. But do we know for a fact that prices have moved too far too fast? Absolutely. Common sense. And I maybe over the weekend I'll go back and look at those charts from those prior years and see was there a gap of this magnitude there? We can see how things moved up at that time, and there were other things that were happening back then. The yield curve was contracting. The transportation stocks were going down quite a bit. So there was many warning signs back in 1999 and then into 2000. That was the internet craze. So now, one other thing I'm mentioning that is 3 days in a row, the call strike got hit. Now I said was too close, and these are starting points that are they're somewhat mechanical these levels. Um, why is this line not here? Hold on a second. Five. I see. I fat fingered that. Give me a second. 50, 50. Okay. So in alignment with that statistic of the market not going up so much in 11 days and so on, um, three times in the history of the stock market, it's like, okay, it's interesting. And this call strike being hit 3 days in a row, which 99% of the time it's not, neither one of these strikes are hit. I think that says something about going too far too fast. In any event, uh, it, historically, it doesn't happen too often. So I wanted to share that. Now, as prices have moved up, started with a 3% or so gap from this consolidation. There's a ceasefire. That was sound more like fire on the stock market. In any event, we've got an unfilled gap, big, and it gapped up the other day. So these are reference points that you're going to want to be aware of in the future You can set alerts, put horizontal lines there, set alerts at horizontal lines, and just forget about them until prices come. And so I put this little box there. Right? There was a tiny little gap up there that got filled. But the prior day's low is our first reference point of support. And that's what will be one of the things that we always monitor as prices are moving up or if they're moving down. Do you get a close below a prior day's low? And while in putting that in the context of this move up is not significant, you can see from here on the way up, there was no close below a prior day's low. So on a short-term basis, when that happens, it'll be something of significance. And we get a close below a prior day's low. And same thing. And then from there, you say, well, where's there a pivot low? There's no pivot lows because it went straight up. In other words, there is a big void here, a giant one. And people are going to be like, oh, where do I buy the pullback? Well, it might be on the SPX, it might be at a whole number. This little stall here, which is in alignment with a whole number. Maybe it chops around for a while and moving averages start to curl up where they've come from down to flattish to curling back up again following the price. So we'll see, how that happens. And at some point as it pulls back, it'll form a pivot. Over here, a pivot will form, and that'll be part of the process. So as we get together here, for those on social media, come and join us each morning and us in the green room when we're talking about this. That's what we'll be looking for as we go ahead into the coming weeks, is that where does it pull back? This unfilled gap, does it form a pivot there? Do we get a retest of that? Does it collapse down into here? All of that is the unknown. So right now we have a market that's gone too far, too fast, and we're going to see what plays catch up. So I said yesterday that, hey, maybe it's time for the Dow to play catch up. It did nothing. It did nothing. Right? So there's this nice little continuation pattern right here. And now it's up. It's still going sideways. And what, thinking this morning about too far, too fast, what is the market going to do? I think it's unlikely it's going to collapse. Right? There's going to be some kind of correctional process, but money rotates, right, from strong to weak. I mentioned I don't know, it was pre-market or in the room yesterday that it was clear that money was rotating out of semiconductors at one part of the day. Right? They were all the ones in my list, except for maybe one, was below its opening price and below yesterday's close. So you can see, that's two of my columns. Is it above or below yesterday's close, and is it above the opening price of the day? And if they're both red, well, I know that that's under some selling pressure that day. And you still got to go back to the chart and see, put it in the context of the trend, void, so on and so forth. And so money is rotating out of semiconductors, profit taking. They still look amazing. Everything does look amazing when, just before it tops. I don't know how much it'll pull back, but look how the money came back into software, the breakdown failure, and, got stopped out of this. 2020 hindsight, it did look terrible, after going sideways and broke down. But semiconductors looked terrible over here. 20 under the 50, pointing down. It broke down under the lows. We don't know it's going to do this. I mentioned, because we always think like, hey, you know what? It's on this moment over here, that's going down to the 200. That's lined up with that pivot low. And it's like, really, Greg? Watch this. And it does that. And this is how bar by bar analysis forces you to step away from your opinion, especially if you've placed a trade and now it's like, oh, it's not supposed to do that. I was supposed to get paid down here. And it pops back up. And of course, this is the ceasefire and so on. But look, too far, too fast. Yeah. And so was pulling back during the trading day. I think it was here you go, was here. And then buyers just couldn't resist and came screaming back into it again. And that's one of the themes to be watching for. Not that semiconductors are going to collapse, but could have a normal pullback. And the depth of this retracement on these software stocks are going to be where money continues to rotate into. And while we may see some damage being done, you know, over here, normal fuse pull back into this area there. Maybe some of these will be going sideways and showing relative strength. These are a lot of the things that we'll just have to observe over time to see what shows relative strength and what shows relative weakness. Um, hey, Hector, sure. I mean, internals, breadth, I shared that in yesterday's MT Live. Internals, breadth has gotten extreme, but it's supposed to get extreme with a move like this. If breadth didn't become extreme on a move like this, that would be like a screaming, air horn going off with red lights. It's like something bad's going to happen here. So breadth is supposed to get way too far up there. So one of the things you can watch for when the market corrects, and it's going to, right? Whatever it looks like in bar by bars, watch when it gets down to the zero line. Because in bullish moves like this, whatever correction's going on, it may be sideways, the breadth often comes down to the zero line, and that's where you can have a heads up as to the next turn. There's little to no support here. I mean, people will be pointing out toward minor support, what's beyond here, wherever. Look, you just follow bar by bar. Eventually, we're going to see some pattern, however it's going to form. But this is like a miracle recovery from this rounding top recovery in the matter of a few days. Okay. All right. So other markets, Russell is up at resistance. Pretty much anything that's participated is at resistance. It's likely to stall. And so that stalled yesterday. You can see that small candle body. It barely took out the prior day's high. So in any of these indices that you're following or stocks that you think they need to come down and rest, does it close below a prior day's low? In my experience, turning days, I don't know if today is going to be a turning day. Whether it's today or tomorrow or next week, there's going to be a turning day where it transitions from green to red. And those turning days, just like that semiconductor chart I showed you, they can be nasty, meaning it looks like a turn day and turns out not to be a turn day. So on a closing basis, that's one of the things we look for. When are we going to get one red bar that closes below a prior day's low? Here's the spider chart. Here's the unfilled gap. You can see where prices are at. They're gapping up. You can see the cursor up there up above. They're gapping up, and some kind of a gap and crap, I think, is highly likely. We'll see what happens. Prior day's low is first support, and a gap fill. This is a minor gap up right here. It's where prices are at. Minor gap up to new all-time highs. To come down and fill that gap would not be a big deal. There are probably going to be buyers there. It's a 5-minute chart, 65-minute chart. It's in the same place since it went sideways apart. You've got a little sideways consolidation there. So breaking down below 699-ish, that probably opens, 699 would put it on the top of the bar there. But there isn't a lot of support for it to start to focus on as a trader to say, hey, where's it going to pull back? These are from yesterday. This hasn't updated yet to today's lines. Maybe on my 65-minute chart it has. I don't even have it on the 15. I could put them on a pre-market chart. Anyway, we'll see where it is as we get going here. All right. So again, things have moved up. They moved up a lot. I think that YM could be the one where money rotates into. It plays a little catch up. If you look at stocks within that, we'll look at it later. But this has a consolidation there, room to move up. Oil's up a little bit, not a big deal. So you certainly want to see if it continues to come down. Bitcoin is doing a lot of nothing. Earlier in the week, I said, look, it's at the top of the trading range. It went from the bottom of the range to the top of the range. Let's see if it can go sideways there. How about a correction bar? Something to give us, hey, a signal that this could go higher. Gold is up a little bit, not going anywhere. So whatever, something might be green pre-market, it doesn't mean it's got a pattern that's attractive. This is still struggling. Just when they come down like that, they struggle. It's a strong move, and it's a grinder to the upside. It's not going flat. Flattish, rounding bottoms after a move like that repair the damage. Grinders to the upside after a move like that, very suspect. All yours, Dan.
Good morning. Very impressive move here. Today's Thursday, so that would be 1 DTEs on the credit spreads. Let's look at alarms, earnings, what we do every day. Caesar's Palace. My alarm went off, so that looks good. Buy over yesterday's high, stop under this entire base. Buy setup weekly, bottom pattern monthly. Marvel under yesterday's low, call spread. Bravo X-ray. This is the private credit stuff. We've been trading a couple of these stocks, so we're still in this in trail mode. Up alarm went off. Just going to trail mode, period. Curve. We have a call spread. My up alarm went off pre-market, but we're okay now. Let me reset it. We got the 125s, so still far away. Expires tomorrow. So now it's the old melting ice cube. And there might have been pending news because the juice yesterday was massive for the 125s. So maybe that news is what, if there's news, because it did gap up. Hope. Sam, this was yours. I had an up alarm go off, but I don't see the prints. That's it on alarms. Let's go to earnings. Homeboy, regional bank, gapping down, no pattern. Look at the ETF, KRE looks a whole lot better. Just doesn't have a big target, but that's very nice consolidation after the gap up. Slug, bottoming pattern broke out, gapping down, no pattern. JB Hunt, transport, no pattern, no void. Gapping up a few pennies, bullish 15. Look, in the last 2 days, incredible 15. So you could buy 5-minute high for a day trade, but obviously no no swing. It's up a lot approaching that target. That's it. Nothing on earnings. On Apple, we were watching yesterday. When I glanced up, I saw it exploding here. And I was waiting for a little pullback right here. And as you see, didn't get it. But software continues strong. Microsoft's gapping up again. Look at that 15-minute chart. Look at this gap. And that's pre-market, but still just took off yesterday. And that's, oh no, these are more earnings. Okay, these are in the morning earnings, TSM. No pattern, opening pretty flat. That's a semi Taiwan. Semis have been on fire. Pepsi 156. Guess small little gap in a range, no pattern. Abbott 97. So that's a bearish gap and a downtrend. That's a short watch on an intraday bounce in the call spread. Schwab, $97, bearish gap, but that's a big gap. Seriously, doubt there's going to be any premium for a call spread. PLD, 142, bullish gap, resistance. Wow, there's nothing. They're very little. I posted Caesar's Palace. Here's another one I posted. What is here? Oh, ALB I had posted yesterday. My up alarm went off. So good. It's not triggering right now. So let me reset the alarm. So ALB looks good. What else here? Probably what's REG. So that's a 1, 2, 3. So those are my best directionals. The Marvel alarm just went off again. We had an alarm at 133. Let me reset it a little lower, 132. 20. Car. We've been watching this. I've been watching it for 2 weeks. It's a great pattern to sell out of the money calls. They're just spreading. Yesterday, so look, the stocks of, let's just use round numbers, $400. We could have sold these 620 calls that expire this Friday, tomorrow, for $2. It's insane premium, insane. But you got to have the experience to do things because it's tail risk. The odds of this going to 620 by tomorrow 4 p.m. are extremely low. But you got to be prepared if it starts going in your face and then those spreads widen and you're like, oh my God, how do I manage this thing? Back to here, back to earnings. Bravo Kilo. Gapping down. That's all-time highs. That's amazing strength. That is just gapping down. No pattern. Now, had this open flat, US Biggie, I would have said you could have bought yesterday's high because you still have you would have had a target up here. But now it's gapping down, and so now it's a big fat nothing. Marsh, big fat nothing. And look at your moving averages also. I mean, it could be a put spread on 65. But look, top of the range. Look at all those football players. There's nothing. No pattern. Now, let's say it gapped up to 177. Well, it almost is actually. Okay, so maybe I take it back. You could watch out for 30-minute high. So I'll leave it on the list. Travelers, no, March, 30-minute high. Travelers is gapping down 293, so that's a call spread idea. 1 DTE call spread. CFG gapping down, that would have been a continuation pattern, but not a big target. Key, same, gapping down, deleting you with. Now, had this open flat, I'd say you could buy yesterday's high. That's a bottoming pattern. Man, opening flat, that's a bottoming pattern. Even though it's up 3 bars, I kind of view Tuesday as a continuation bar, closing breakout and avoid in a bullish 15. So that's not bad for a 5-minute high. I'll put that on the bottom right here. And I actually see Apple pulling in pre-market, Microsoft strong, Google strong. Good. I was going to give this official as a directional trade on Tuesday. Google, beautiful continuation with a void. And I just didn't chase the gap. It was a gap and go. And it's frustrating when you have a pattern, you're excited to enter it the next day, and then the friggin' gap messes you up. And that's what Trump did to us in the broader markets. Look at the spiders here. Little inverse head and shoulder down here. And we were talking in the green room. We had a big list of things to buy the next day. And then it gaps up 3%. We didn't chase. So that's it on earnings. Town, Sam's List, little buy setup, Costco had. They said they were going to increase their quarterly dividend. Increase quarterly dividend. It's a reversal in support. So let's watch Costco 5-minute high for a put spread. Point. Oh, look at man, bottom right. Okay, so I said 5-minute high. Checkpoint, we're short. I guess had an up alarm go off, but it's still okay. Reset the alarm, 139. All right, so man, I got zero interest now. Zero interest. Home Depot, that's an early alarm. We're in it. Directional and put spread. I'd look pre-market because this would be a good put spread for a new one. Next week, but the spreads are too wide.
Semiconductors are getting sold again. Puts, call spreads.
Yeah, I got Marvel right here. Alarm went off. Oh, that's a day trade short too. Short 5-minute low. Do it right here. That looks great for day trade and closes weak, hold it as a short. Let me check call spreads for tomorrow. Spreads, man, 50 by 90. Stupid spreads. Unless you went out the next week, but I wouldn't do that right now. but 5-minute low. Day trade short. Oh, look at man. Bottom right. Reverse, but I'm not messing with it. Caesar's Palace triggered. That looks good. Checkpoint alarm. All right, not liking that. But we'll give it a little room.
That CHKP was still in a downtrend, but it's in the wrong sector.
Right, I got it up right now. That's what I was just talking about. I'm not liking it.
I don't know how much room you're going to give it.
What?
I don't know how much room you're going to give it.
You tell me. I was gonna say 30-minute high. As the market is stalled here and extended. On the stop, as you know, was Tuesday's highs, but I'd say 30-minute high. Marble, I see there, still falling. Oh, that ALB took off. Ah, so ALB triggered. Okay. Oh, it opened right at the entry. Hasbro alarm, one of you mentioned it yesterday. Big old multi-week turn here. Depot, Costco, Costco, let me check one DTE puts. $9.65. 58 by 174, so stupid spreads.